Hey everyone, Brian Hoops here with Midwest Market Solutions. This is our monthly supply and demand webinar. We do this each and every month after a USDA report, and today is June the 11th. It's Tuesday, and the report came out, and we saw bullish corn numbers and a bullish reaction to the corn numbers. Wheat futures also managed to close higher despite really the lack of any bullish inputs, but it was the corn market leading our way higher. We're going to talk about the corn market, soybeans, wheat, and maybe look at a couple charts in our time together. So thanks again for joining us. As always, follow us on Twitter at Midwest Markets and go to our website for more information, midwestmarketsolutions.com. This webinar is free as always. If you are not a subscriber to Midwest Markets, we thank you for logging in and joining us. If you are a subscriber to our website, you receive this via email, and thanks again for tuning in. We do little mini webinars twice a day. If you like this webinar format where we do videos and talk about the markets, we do one every morning, talking about the fundamentals and news, what we can expect during the trading day. And in the afternoon, we take a look at what happened during the trading session, maybe some technical analysis, and that information is available to our clients. So there's a disclaimer. We would like you again to read through that. As always, if you have questions, make sure you contact any of our offices. They're listed there on their screen. We were founded in 2002, been in business over 20 years. We have 12 licensed brokers, and our offices are listed there on the screen all the way out into Enos, Montana, and up as far north as Minnesota, Illinois, and I am in Springfield, Missouri, our home office. We clear through RJ O'Ryan, the oldest firm of the CM. Let's look at some of our services available. We do have full and discount brokerage services available, as well as trading platforms, market quotes. We have our Market Solutions Hedge program that if you are considering having someone help you with your marketing, let us be of assistance to you. We have our Market Insider daily newsletters, trader newsletters, weekly newsletters, audio and video market commentaries, as well as our Twitter feed and text service for marketing. So let's take a look at some of these numbers here and what stands out to us. Well, a couple things. Look at the old crop corn number here. It's at 2.195. That's an increase of 100 million, and that's significant because our old crop supplies have increased here as our demand has remained slow, and we need this. This is becoming really important because we need a cushion. We are having some crop problems around the United States. It's not just in one state or one region, it's all over. And this is vitally important to give us a cushion of product. We have a big cushion of soybeans. We have a big cushion of wheat. These have not changed. In fact, this is not bullish by any means, but this is vitally important, and we're going to see why here as we look at some of these balance sheet numbers. As far as our new crop, this is new crop here, grain ending stocks. Corn stocks, big turnaround from last month. We knew we would be down from 2.485. The question was going to be, how aggressive would the USDA be today and making changes, and they were very aggressive. We'll talk about more specifics what they did here in just a second, but looking at this chart, they were ultra aggressive, I thought, compared to the average trade gas and what we had seen historically from the government. Our corn stocks 1.675. This is a manageable number, and we're trading 445 on December corn. That's a respectable number given this ending stocks number. If you would have told me 6 months ago we had ending stocks at this, I'd say we'd be over $4, maybe $4.30. So we've got a little premium in the market, and there's going to be a case where we need to pump more premium into the markets in here. Soybean stocks, this is a huge burdensome number. It's above last month, and wheat stocks, another huge burdensome number. Very close to last month, but actually a little bit lower than last year as well. But overall, you've got some big stocks here in wheat and soybeans, manageable in corn, and like I said, a situation where we may see those stock numbers in retreat. Let's look at the world stocks. These are always important, and why are they important? Well, we've had big crops in South America, and that's really undercutting our U.S. Export markets, and you saw our increase in our old crop stocks of of corn and of soybeans. That's because we've got big supplies in the world market waiting to take their place. So our old crop ending stocks for corn, not much change. In fact, all these soybeans and wheat, not much changes, but this is a big change here. World ending stocks for corn expected to drop from one year to the next. That's a pretty significant drop. And if you go back 2 years, go back here, 340,000 metric tons down to 290. So we've dropped about 50,000 metric tons on a worldwide basis. This is a signal that we're going to see South America plant more corn this next year. U.S. producers no doubt will respond to these higher prices and plant much more corn in 2020 than what we did in 2019. But we'll talk about marketing strategies here in a second. Not much change in the world soybean stocks or world wheat. This is actually up a little bit. And look at this world wheat number, 294 compared to a couple years ago, 282. So world stocks of wheat are increasing. What should that tell you to do? Do not store wheat. That's what it's telling you to do. Do not store wheat. You can store corn, maybe store beans. Do not store the wheat. That's what this market is clearly giving you a signal. All right, let's take a look at the fundamentals that were given to us from the USDA today. We look at the fundamentals here. I believe that that's what's going to give us direction for prices. It's not 60-minute charts. It's not technicals. It's not a reversal. This is what's going to give us direction longer term. If you want to market your corn and soybeans at the best prices possible, focus on these fundamentals. Here is a huge number right here, a 10 bushel per acre reduction from 176 down to 166. The average guess was about 172.4. Now that's I think nobody really believed by the end of this marketing year we'd be at 172, but the thought was USDA will be conservative and cut their production numbers slowly, and they did anything but. They dropped it 10 bushels an acre down to 166. They also cut planted acres by 3 million, and that's a significant number as well. So we're taking 3 million acres out of production. We're taking 10 bushels an acre off of our top end of yield. Hold on one second. Got a phone call coming in. I'll kill that. All right, so we're back here. Production drops from a 15 billion bushel crop to 13.68. That's a pretty big production drop. Possibly we're going to see this shortfall even a little bit more. Here's a 100 million bushel increase of beginning stocks. Remember we talked about that, and that was key because we need this cushion. If we came into this marketing year with 1.2 billion bushels or something, and you drop this amount off of it in one fell swoop, boy, you'd have sharply higher prices, needless to say. But our supply is coming down, and one of the key things to focus on here, the USDA says we're going to produce a 13.68 billion bushel corn crop. Look at our total usage. We're going to use more than that. We're going to start drawing down into ending stocks, and that means we're going to see higher prices. Other things to look at here, they did lower feed and residual by 300 million bushels, and they lowered exports by 125. If prices move higher, this number is going to change quite a bit. This number of the feed number is going to change quite a bit because we'll feed less corn to our hogs, our cattle. We'll feed them out a little bit quicker weight, so we'll use less and we'll be able to export less, especially when we mentioned that South America has produced a monster crop. Ethanol usage is good and probably will get even stronger going forward. In fact, while I'm recording this, President Trump is in Iowa talking about on Fox Business right now that increasing the amount of ethanol that can be used for summer driving. They lifted that restriction. So we do expect over time ethanol usage to increase, and that's going to give us more usage here, and our ending stocks are going to draw down even further. This is an 800 million drawdown of ending stocks. Notice the price jumped by 50 cents a bushel. This number is kind of the wild card and subject change going forward, and I think we're going to see some changes as we move forward. Take a look here at our next slide. Now we can get into some projections and mess with some of these numbers. This column here is what the USDA gave us today. We just looked at these numbers, same numbers that we just looked at. These are 3 different projections. I have dropped our planted acres, and I played with this, and there's so many variables this year. Somebody asked me, can corn go a lot higher? Well, if there's ever a year that the corn market could go higher to $5, $6, maybe $7, it's this year. You are likely to see a reduction of planted acres. USDA said it's 89.8. Everyone expects in the June acreage report on the 28th, we're going to see more of a reduction. We could see maybe another 5 million acres and take a total 8 out of production. That's a significant amount. And once you do that, then you start playing with the yield. And here's our average yield column. And here's 3 different yield scenarios. And I love doing these spreadsheets because you can plug in any numbers you want and make these yield scenarios really change completely. And you can notice here, once we start taking 5 million acres out of production and change the yield, our production totals change dramatically as well. So we have the same carry-in, that won't change. Our imports will probably increase a little bit. USDA said that. If you look at down here at our demand, we expect that the feed, as our yields get smaller, prices will go up. Our feed usage, this column here, will go down. Our exports will go down as our prices increase. But look at our stocks numbers. That's kind of the key going forward. It's pretty hard to see a scenario where our stocks are anywhere better than where we were a year ago. This column here says our yields actually go up, because I think you got to play that what if scenario. What if our yields actually improve from 166 that the USDA said? Crop conditions on Monday were the lowest since 1996. What if they improve going forward and we actually have a better yield at 170 bushels per acre? That's still down from trend, but what if it is a little bit larger? We still have a big cut in our ending stocks, despite exports and everything dropping just a little bit because we lost so many acres. What if our yields are virtually identical to what the USDA said today? Our stocks still drop a little bit further. What if our yields are 150? That's, I think, a 15% reduction from trendline yield, 26 bushels off of our trend line. Now you're talking stocks below a billion bushels. And so you're running into some pretty tight windows in here, 3.5% stocks to use ratio. These are some bullish numbers, and prices would certainly go much higher. I don't see a real scenario, at least until we get into probably around September supply and demand report, before you have a major sell-off in this market. You're going to have pullbacks in the market. You're going to have pullbacks in prices. Certainly, like we saw here, we kind of hovered around this 430 area, and we haven't taken out 453. And you know what? In fact, let's just look at a chart. We hovered many days 430. In fact, we spiked below it 3-4 times, and now we're still below 453. So we've got big resistance here. It looks like good support at 430. Is there a scenario where we pull back to 430? Yeah, probably. If you get the right weather in the next week or so, some really good growing conditions, we could see the market pull back from these highs. We got to get above this high. I think we will, and I think we'll go quite a bit higher. Still looking at 465 as a technical target, and possibly $5, depending upon how growing conditions go and how many acres we take out of production. But I think, this 445 to 453 range, given what we know after this report today, I think that's a pretty good number based off of what the fundamentals are today. It's a fair value in my opinion. So if we can trade higher or lower based off of weather, but that acreage report at the end of the month, that's the key for price direction. Let's look at soybeans. They have a very unimpressive balance sheet. Very few changes in here. From May to June, the only change they made to the balance sheets, nothing as far as planted, harvested acres, anything, was beginning stocks jumped by 75 million. That puts our old crop stocks higher, over 1.070 billion bushels, and ending stocks at 1.045. They say our yield is 49.5. Last year it was 51.6. So in my opinion, they've already dropped a yield reduction from last year, and I think they're okay with not making any additional changes to the balance sheet at this time. I think that was a fair number as far as our production goes. It's very early in the growing season. In fact, we have 33.5 million acres of soybeans to plant yet. We have about 15.5 million of corn. Some of that just will not be planted. I talked with some producers today who said they're done with corn. They're finishing the field that they're in, and once that field is finished, they're not going to open up any more fields. I think what you have to do with the soybeans is you look at the acres planted. Here's today's number, 84.6, and that is not a change from what they said earlier. They're saying no changes, but I think we've heard enough producers say they are going to switch some acres from soybeans to corn. So maybe you go up 1 million, here's 2 million, here's a 3 million acre increase. And I left the yield unchanged from what the USDA said. We're going to assume decent growing conditions through the rest of the summer. We've got plenty of soil moisture, too much in some areas. Temperatures are warming. We're now in a weather cycle. About June 1st, that has turned a little bit warmer and drier, which is exactly what we need. Then we turn a little bit wetter again in July. That should be pretty good for scenario for soybeans. So I think what your major risk is here is acres jumping up, and in almost in any scenario that we have, you're going to look at ending stocks over 1 billion bushels. Big stocks to use ratio, never before, you can go back here, going back to 2012 and 13, have we seen ending stocks anywhere close to this area. In fact, if this scenario would be accurate, 1192, you had 191 just 4 or 5 years ago, and a big change in our stocks to use numbers. So I think your major change, your major risk here is increased acres of beans being planted. Soybeans have a very bearish fundamental picture. Unless you change this yield significantly, I think your best marketing opportunities are going to come here in the next couple of weeks. If we get a rally in corn, you got to be using that for a rally in soybeans. Let's look at a soybean chart. I'll flip over here to soybeans real quickly. Here's a chart of soybeans. You notice how they've rallied up, but they had a very different pattern than corn. Corn's up in this range compared to where it was previously. It's well above these highs. Beans have not even come close to trading up there. They've rallied, had this little rally here in May and June, then pulled back. I think if you get a rally with corn and this bean market gets back up to the 910, anywhere back to this 920 area, probably got to be making some sales based off of the fundamentals that we know. And then you can look at maybe buying some 9. If you have 1 billion bushels of soybeans and we effectively end the growing season for corn and beans, in September, October, I could see this soybean market dropping as we go into the harvest time frame, trying to stimulate some demand. So I got to be very, very cautious on this soybean market based off of the fundamentals that the USDA gave us today. Let's take a look at wheat futures and the fundamentals that the wheat USDA said today, and then we'll kind of wrap things up here after that. All right, as far as what the USDA said about wheat, production 1.903 above the average guess, above last month and last year. So production-wise, bearish. All wheat, all winter wheat, about what we had seen last month, not many changes. This is hard red wheat. This is Kansas City. Soft red wheat, this is Chicago. So just wanted to clarify that. You're looking at 794 million bushels of production, up from last month. And look at compared to a year ago, well above last year. Compare that to Chicago, 258. Last year we were 286. Our crop size in Chicago, soft red wheat, getting smaller. Kansas City hard red wheat getting larger. So that's why you're seeing spread trades, the spread between Chicago and Kansas City widening out. And I think that that spread will continue. In fact, I'm going to show you a chart of that spread. Let me go here. This is Chicago December versus Chicago Kansas City. Most people thought Kansas City would outgain Chicago based off of smaller planted acres, but it's what you plant, it's what you grow. And this growing season has been awesome for winter wheat in Kansas City in the hard red winter wheat belt. Here is the spread traded even, and the market has really started to put in a premium. Now you've got Chicago 40 over Kansas City, and I think it wants to stay premium over Kansas City. There's talk that if Kansas City gets cheap enough, we could see it move into some of the terminal locations in the Ohio River Valley. That's certainly a possibility, but I think the price will determine if that happens or not. And I look for Chicago to continue to gain over Kansas City. I think that's the play here based off of what the USDA said as far as fundamentals. As far as any revisions, there's just not very much going on here. Yield, barely any changes. and beginning stocks, small changes. Overall production, 6 billion bushel changes, and as far as they're pumping a little bit more feed into the pipelines. If that happens, it's going to be Kansas City, where the prices are cheaper, and overall, we're using about 2 billion bushels, a little over 2 billion. We're not producing quite that much, but we've got just so much cushion in here. I'm surprised that the price level would jump 40 cents when you have over a billion bushels of stocks. I'm going to look at a Kansas City December Kansas City wheat chart, and then we'll sign off here. So bear with us just a minute or two. This is the chart of December Kansas City. It had a spike rally up here to about 527. There's a lot of resistance in this range. If you're a producer of Kansas City wheat, I think this is up into your resistance. If we get some sort of a bounce rally here with corn, I think that's the best case scenario rally for wheat. We're going to have a big crop, which means big supplies, but we're also going to have fairly low protein, which means we cannot export it. So I would not store wheat this year. I would be looking at marketing it. If we get rallies, go ahead and hedge it and sell it for deliveries. But storing wheat, I think, is a losing proposition this year. I don't see a lot of price appreciation after it's harvested. The only caveat is if corn takes off and rally, wheat will be a follower, just to kind of keep pace with the corn market. But overall, the fundamentals that we just looked at, nah, it's bearish. So there's nothing to really be excited about as far as wheat fundamentals go. All right, I want to thank you for your attention and participation into the meeting. If we can be of help in the future, please contact us. I hope you have a great evening. Hope this helps you out. And again, this has been Brian Hoops with Midwest Market Solutions, and we'll talk to you again soon.